Assalamualaikum guys. We are still examining some misconception about Islamic banking today, and the third misconception is that the Islamic banking is driven by the profit loss sharing system, or PLS, and the PLS can either be a mudarabah PLS, that is partnership of human capital and money capital, as well as general partnership, which is musyarakah, and that is the partnership of money capital. So either way, that has been the claim made by many people about the Islamic banking model and operation. So I would like to clear the air, and we will have to look at this claim from the bigger perspective of banking, that is to look at the asset side of banking, the funding side, as well as the capital side. So I have already looked into the asset side, where the claim is wrong all the way. There is no PLS in the asset side. The asset side contains mostly murabaha and tawarruk, so they are all debt financing. There is no PLS financing. And why there is no such thing as PLS on the asset side? It is simply because the funding side has been debt financing. So when the Islamic bank is using leverage fund or deposit funds under the name of CASA account and fixed deposit account, so this deposit fund are essentially leverage fund, and for that matter, once the bank has disclosed the funding sources as deposit, then the regulator and at the higher end, the Basel Committee of Banking Supervision require the bank to hold sufficient capital against the exposure against the murabaha and tawarruk given away by the bank. And so that is the reason why on the asset side it is mostly debt and not PLS, because the bank would not want to hold any asset on their banking book that would bear a great deal of risk to the bank, and that is why they are abstaining away from PLS, because PLS will require the bank to hold huge amount of capital, as the PLS contract, as we know, are very risky. So the funding side has been debt financing, but in some places there is a mix of debt and equity. Places under the IFSB jurisdiction, when the funding is coming from mudarabah deposit. So mudarabah deposits are a mix of mudarabah, which is equity, and deposit, which is a loan or debt. And how would this debt and loan or equity be defined? It is based on the alpha factor, that is the amount of risk that the bank is able, or the bank is willing to hold on the asset side. But in Malaysia, there is a great distinction made between deposit fund and PLS fund. Deposit fund are essentially, debt fund. But the regulator, Bank Negara Malaysia, require the banks to segregate the deposit fund from the equity fund. The equity fund is the mudarabah investment account, and we can see that this mudarabah investment account is a PLS account, or is a PLS fund. So the academics or any of these people who are trying to explain the nature of their Islamic banking, to explain their findings, they need to be a bit more, careful about the claim. So if it is PLS, they need to explain where is it coming from. Is it coming from asset side or funding side or on the capital side, which is our topic today. The only place where PLS is found in total is in fact the capital side. That is, banking capital is based on PLS, especially capital, equity capital or tier 1 capital. So, as we know in general, that banking capital is the difference between asset and liabilities. Banking asset comprised of cash and loans, murabaha and securities or bond or sukuk. And liabilities are essentially the deposit account, current saving account, fixed deposit account, money market funds, or any funds issued by the bank using sukuk or bonds. These are liability. So we will subtract the liability from the asset and we can get the banking capital. So the role of banking capital, as we know, is to cushion the financing or asset against losses. The bank do not use capital fund to make loan or to make murabaha. So capital is there, as an insurance against any impending losses. So if the bank suffer a loss, then capital will decline, and if the bank make profit, then capital will increase. So in the sense that banking capital is equity, and it is not protected from losses. So that is the only place in the banking business where the profit and loss system prevail without any doubt or without any caveat. So a bank is a joint stock company where the business is owned by the investor or by the shareholder. It means that the investment is based on profit loss sharing or PLS. So capital fund, that is like tier 1 capital or equity capital, will expand or increase with positive earning, and the capital fund will decrease with negative earning. So when the bank suffer losses, then that losses will have to be absorbed by capital that will make it to fall. Earnings are influenced by revenues, meaning that these are revenues generated by the murabaha. It is influenced by cost of fund, the money that the bank pays the depositors, overhead expenditure, and loan loss provision or any other provision that the bank is holding, against any impending losses based on their forecast. So in a sense that the capital fund is not protected, or the banking capital is not protected. They are equities, they are PLS. So PLS here refers to the musyarakah or shirkat, that is PLS in capital investment. So this, so we are not looking at PLS in capital and human investment. That is mudarabah. So mudarabah is essentially the partnership of human capital and money capital. But for our case here, banking capital is based on musyarakah or shirkat, that is PLS in capital investment. So this PLS system can also be driven by the conventional bank. But this conventional bank is a riba bank. They are using the riba model to generate revenues, which Islam does not allow. So this business model, is still based on riba. That is where deposits are acquired with riba and loans are issued with riba. So the PLS system is driving capital mobilization, but the business model, that is the revenue generation, is still based on riba. So the PLS doesn't qualify to be compliant, to be Islamic. So this is the issue that we see, that for the Islamic bank, the business model is based on al-bay'. It is based on debt financing. it is not based on the riba model, and so the PLS system is acceptable and Sharia compliant. And this is the only place in the banking framework where the PLS system prevail in total, and there shouldn't be any confusion if somebody claim that the Islamic banking today is based on PLS, and that refers to the banking capital or tier 1 capital. That is correct. But in general, if we were to describe it as PLS, so we need to to be a bit more careful, because PLS, meaning the banking business, are basically based on funding and financing as well as capital. So we need to be a bit more careful in making a general claim about Islamic banking as being driven by PLS. Okay, guys, I'll see you again. Thank you very much. Hope this cleared the matter. Assalamualaikum warahmatullahi wabarakatuh.